And in today's video, I'm going to take a look at the stock market. So the bears, of course, are going to view this as a major top, and it's not. It's a profit-taking event. There was some question whether or not we would get a recognizable move into a daily cycle low. The market's kind of, in some of my previous videos, I pointed this out, been chopping around that 10-day moving average. Really unable to give us anything that looked like a real move into a daily cycle low until today. And there's always, some news always pops up, and that, is conveniently used to explain why the market is moving down. But that the news always manages to pop up right in the timing band for a correction. So a normal daily cycle low, usually in the stock market anyway, usually occurs somewhere between day 35 and day 45. Today is day 38, so we're right in the timing band for it. As of today anyway, this is still really unusually mild. Normally, a minimum retracement that I would look for out of any kind of cycle low is at least back to the 38% Fibonacci. We're not even there yet. So, and the McClellan oscillator is deeply oversold today. So, I don't know how much longer this can last before we get our bottom, and then the next leg up begins. And all this is just clearing the sentiment that had built up from this extremely powerful rally, which too many people got bullish, and we need to have some kind of profit-taking event, clear sentiment, convince people that the market is going down, and then that builds the fuel for the next leg up, and that's what we're doing. And like I said, though, so far this is extremely mild. We should at least get to the 38% retracement, and if we don't, then this is going to be just like this. This intermediate cycle low is extremely mild, much milder than a normal intermediate decline. I don't think this even made it back to the 38% retracement. Let me see if I can widen the chart here. All right, so here's our last intermediate cycle decline. Here was the previous intermediate cycle low. You can see that this intermediate decline was so weak it couldn't even make it back to the 38% retracement. And then more on the smaller daily cycle level, I showed you in the previous frame that so far anyway, this correction has been unable to push down to what I would consider a minimum target. So this intermediate cycle low, very, very mild, milder than I would normally expect. Normal would be back to the 38. Actually, normal would be back to the 50%. Mild would be 38%. Couldn't even make it back to mild. Same thing is happening here. So while people get used to the market just going up day after day after day, so this seems more extreme than what it actually is. Right now, this is still a very, very mild daily cycle correction, and again, we're in the middle of the timing band for it. The RSI is starting to get oversold, so I doubt this is going to last too much longer. I would say by early next week this is going to be done, and then we're going to start the next leg up in this new intermediate cycle. So you're getting a buying opportunity. Early in an intermediate cycle, dips are buying opportunities. You're getting that opportunity here. Trying to time the exact bottom of the dip, of course, is pretty hard to do in real time. But no matter where you decide to buy, it should turn out to be a profitable trade, because this is going to bottom soon, and then we're going to get another push and higher highs into the end of the year. And I don't really expect the next intermediate cycle low and yearly cycle low until early in the spring, like maybe late January, early February, something like that. Then I think we'll have a much scarier correction, something of a higher degree, that like this intermediate cycle low that that takes much longer and goes much deeper, and maybe something that's really scary, like a 10% or bigger correction. As I've been saying, as we get deeper into the what I think is the bubble phase, volatility will pick up, and so I expect there's going to be a period at some point, maybe early next year, where we'll get a really scary 10 to 12 or 15% correction. It'll happen very quickly, and in something like 3 to 5 days. But I don't think we're at that point right now. I think that's going to be later in the intermediate cycle, once institutional traders really start to get nervous about how far the market is stretching to the upside. So that's something that's coming, but I doubt that it's here right now. I don't think this is going to be one of those extremely scary, major corrective moves. I think this is just a normal profit taking event in the normal timing band for a daily cycle low.